Are you an associate dentist looking to purchase your first home? If so, you're in luck because today I'll be exposing my secret to buying your first home. Don't be like many others and make a mistake that could cost you hundreds of thousands of dollars. Take a listen today and we'll discuss many secrets that'll help medical professionals like you and I. In today's video, we'll explore two popular mortgage programs tailored specifically to medical professionals like you and I, the Doctor Loan Program and the Physician Mortgage Program. Both the Doctor Loan Program and the Physician Mortgage Program are designed to make home buying easier for healthcare professionals, and dentists are no exception. While the two programs often share common goals, there are a few key differences that are worth discussing. First, let's talk about eligibility. To qualify for these programs, you typically need to be a licensed dentist. While the specific requirements vary slightly between lenders, generally speaking, they'll check your employment status, your credit score, and your debt-to-income ratio will all be considered. While most of these items are typical of any mortgage application, it's what these lenders can do specifically in your circumstances that sets them apart. Stick with me and I'll show you what I mean. Specifically, the lenders are focused on attracting doctors, and therefore they understand the high debts we tend to carry when compared to our non-doctor and same-age counterparts. This may mean they accept a much higher debt-to-income ratio than other lenders, and some lenders I've seen can even exclude all your dental school student loan debt when calculating your debt-to-income ratio. For many recent graduates, this could mean that they don't include your $330,000 or more of student loan debt when they assess you for the loan. That's a huge advantage available to you just because you're a doctor. This should change the way you think about buying a home as a dental professional. Based on my own experience, lenders are typically quite understanding when it comes to a recent graduate's debt-to-income ratio. When my wife and I had completed our medical and dental school degrees, we faced a significant amount of student loan debt, and we also had substantial credit card debt. Thanks to specialized mortgage programs designed specifically for doctors, and more specifically again, the lender's understanding of the financial challenges doctors face to obtain their degrees, we were still able to purchase our first home. Looking back, it's clear that without these options, we would not have been able to achieve that milestone. At the end of the day, despite all the consumer debt and substantial student loan debt, we were pre-qualified for $500,000 in 2021 at a 2.7% interest rate. Thinking back on those interest rates, it's almost laughable, but that is what we qualified for, and that's what we used to purchase our first home. In the second round, we were making substantially more money, but the current interest rate market at the time was more or less the reason for the higher interest rates. In general, the Doctor Loan Program is offered by specific financial institutions that cater specifically to doctors, while the Physician Mortgage Program may be available for a much wider range of lenders, including banks, credit unions, and mortgage companies. You'll have to do your own research in your own state to see what works for you. Also, there are direct mortgage lenders. They try and find you a mortgage that works for you. By doing that, they negotiate some fees built into the contract, into the mortgage loan, that they will then appreciate. So just be sure to do your own research and don't jump right on one of those direct mortgage lenders if you've not compared the rates in the whole market. A second major difference is the down payment requirement. The Doctor Loan Program typically offers very favorable terms, such as zero down payment, making it very easy for new doctors to obtain a mortgage. While the Physician Mortgage Program may also offer low down payment options, typically the lowest I've seen is around a 5% down payment. I haven't heard of any zero down payment option from the Physician Mortgage Program. A third difference can be found in the specific mortgage programs, but tends to vary less between the two programs themselves, and is more or less a difference between what the programs offer and what other mortgage loans offer. Both programs offer flexible mortgage terms suited to the unique financial situations of dentists. Again, this can include low closing costs, an excellent interest rate, and above all, some offer even no private mortgage insurance, no PMI, even with putting less than 20% down. That's pretty rare. In general, the interest rate a doctor will get tends to be lower than our same-aged and non-doctor counterparts when all other financial categories are controlled for. So by just being a doctor, you get to save potentially thousands of dollars. When expanded over the lifetime of a mortgage loan, that lower interest rate can result in tens, if not hundreds of thousands of dollars in lifetime savings, and that's a big win. To obtain these loans, it's important to have a steady income and an excellent credit history. Lenders may also consider factors such as your employment contract length or the time that you've actually been practicing. Some programs will allow you to access these programs if you've held your license for more than 10 years. Remember to research the specific requirements of each program and your lenders in your state. Next, let's discuss the practical steps to attain one of these loans. First, and as mentioned several times, conduct some research in your state to see what options are even out there. I suggest using Google as a jumping off space. Research the lenders of both programs. Here are a few lenders I've seen: ABC Bank, XYZ Credit Union, and Mortgage Solutions Incorporated. I, for the purchase of my first home, used Neil Home Loans. When contacting these lenders, be sure to inquire about their program details, their interest rates, and any special benefits that they offer to dentists. I've heard some lenders offering a $2,000 towards closing costs if you finance through them. So establishing a relationship with someone you trust can make sense both today and long term. Next, you'll need to gather your financial documents. This often includes tax returns, bank statements, and a proof of employment. It's important to have these ready for the application process. Many applications also include a soft credit check, a check that doesn't really trigger any hard things in your credit history. So be ready for a credit check as well. After the application process, you tend to obtain a pre-qualification letter that basically tells you what the maximum amount of money they will finance your home purchase to is. From there, you go out and get a realtor and start your search. After going under contract for a home, the remainder of the process is fairly conserved between doctor and non-doctor loans. There will be underwriting, there will be loan approval, and there will be the closing documents. And finally, the settlement of the loan. Start today so that you can take advantage of the benefits tailored to medical professionals like you. Thank you for watching the Educated Associate channel. If you found this video helpful, don't mind to like and subscribe for more informative content. I will continue to publish my long-form video content on Monday mornings on this YouTube channel. You can also find much more information tailored to associate dentists on my Instagram or Facebook at The Educated Associate. If you have any questions, you can reach out to me directly at my website, theeducatedassociate.com. And as always, stay drilling, my friends.